Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you could head directly to incomeinvestors.com. You can find the link to the website in the description below. The healthcare crisis in 2020 had negative impacts on many companies, especially those that pay dividends. That was the case with PAGP Holdings LP, traded on NASDAQ under symbol PAGP. But things have been improving for the company since then. John?
Yeah, thanks, Mo. Yeah, Plains GP is a major midstream energy player. The master limited partnership transports more than 8 million barrels per day of crude oil and natural gas liquids in the US and Canada. Its assets include pipelines, terminals, storage facilities, and gathering assets.
And John, what can you tell us about their dividends?
When the pandemic surfaced, management slashed the company's quarterly dividend by 50%, from 36 cents per share in February 2020 to 18 cents per share in May 2020. But after the energy market improved, Plains GP Holdings LP increased its quarterly dividend to 0.2675 per share in February 2023, and followed that with an increase to 0.3175 per share in February 2024. And now, based on the current dividend plan, GP's stock has a forward yield of 7.6%. Plains GP Holding LP is actually on an 11-year dividend streak. The company stock's dividends will likely continue to grow given the company's history of positive free cash flow and its expected higher profitability.
Speaking of which, how are they doing financially?
The health crisis led Plains GP Holdings LP revenues to plummet in 2020, but that was followed by 2 consecutive years of high double-digit revenue growth, which was up to a 10-year high in 2022. The company's revenue slipped in 2023, but they're expected to grow over the next 2 years. Analysts expect Plains GP will grow its revenue by 2.8% to $50.09 billion in 2024, and follow that up with a revenue growth of 8% to $54.12 billion in 2025. As far as the valuation goes, Plains GP Holdings trades at an extremely low 0.07 times its consensus 2025 revenue estimate.
What about its bottom line?
Analysts expect Plains GP Holdings to grow its adjusted profits to $1.38 per share in 2024, and that's compared to $1 per diluted share in 2023. The following year looks even better, though, with a consensus estimate of $1.75 per diluted share in 2025. The midstream energy segment requires a significant amount of capital expenditures in order to build its infrastructure. On that note, Plains GP Holding has $8.02 billion in debt and $450 million in cash. We don't see any major financial issues at this time, though. The partnership had a relatively strong interest coverage ratio of 3.1 times in 2023. Moreover, Plains GP Holding LP's Petrosky score, which is an indicator of the company's balance sheet, profitability, and operational efficiency, is 7. And that's near the top of the scores range of 1 to 9.
John, thank you so much for your insights. Plains GP stock's higher dividend in the last 2 years are encouraging. The company's expected earnings growth combined with its low revenue multiple should allow it to continue raising its dividend. PAGP stock has a strong institutional support with 305 institutional investors holding 85.2% of the outstanding shares at the time of this recording. Moreover, since Plains GP Holdings LP share is significantly below its highs, its potential for price appreciation is enormous. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.